What's going on, my stock market bulls and bears? I am your host, Terry, and welcome to the channel. Buy the dip, that's right, guys. I got something really special for you guys today, man. This is a true treat. I want to thank my man Wancho for letting me know about this one, because this has to be the most sexiest stock that we're ever going to talk about on the channel ever. Sexy. That's right, guys. Very sexy. We're talking about Playboy. That is right, guys. Playboy is coming to a SPAC. No pun intended, but Playboy is coming to a SPAC, and this is going to be nuts. And here it is, guys, ticker symbol, MCAC. You can buy it on Robinhood, and what I like about it, and a little bit of seriousness here, as crazy as this is, it's Mountain Crest here on Robinhood. It's only $10.20 a share, and as you know with these SPACs, they have a $10 base price. So if the merger doesn't go through, the SPAC goes back to $10. And you can't lose any more than what the SPAC price is of $10. So you're only risking 20 cents per share right now on this possible investment. So there's a lot of upside, literally, a lot of upside here, guys, with not too much downside, if you know what I'm saying. So let's get into this article here. I have a couple clips to show you. And here it is, man. Playboy releases 3 and 9 month financial results through September 30th of 2020. And these results are actually really good. These results are like, at first we were all joking about it there in the Discord, man. We were literally coming up all kind of crazy puns and jokes and things like that. But when you go reading through their financials, this could actually be a big payoff, no pun intended. But anyway, the third quarter 2020 revenue is up 86% year over year to $35 million. Net income of $1.3 million. The third quarter 2020 adjusted EBITDA is up 130% year over year to $7.4 million. Year-to-date revenue is up 78% year over year, driven by growth to direct consumer business. Announces post-merger parent company name to change to the ticker symbol PLBY Group Inc. signaling. I'm going to go over a couple of things here, guys, that what I really actually like about this stock, and we're going to have a lot of fun with this one. I know, man, like, hard to believe. We're going to really invest in Playboy. Are they just magazines now? Is that all they really got? Because that's all you think about. I went to their website, and I got to be very careful because we can get demonetized here on this one. But I am going to show a clip, and if we get demonetized, guys, it kind of is what it is. But I think we need to see that Playboy nowadays in 2020 is more than just a magazine, guys. They are a digital service. They have Playboy TV, which is kind of like Disney Plus and Hulu and streaming. So Playboy is in the streaming thing with the Playmates. That's right, the Playboy bunnies. You can see the bunnies at home doing things and on a live stream, so that is really good. They're having shows. They have all kind of merchandise, calendars, digital things, and I like that kind of direction. So it's just crazy that we're actually talking kind of serious about Playboy SPAC being a great investment for the long term, if you know what I'm saying. But I don't know, man. This is just really crazy. I think they're set to merge. That may be down here further in his article, but let's get to this clip real quick, and we will see what happens here, guys. I'm going to show you this little clip and why I think this is going to be a winner. So, all right, guys, and here we are on the Playboy website, so we got to be extra careful. But if you spend $125, you get the free Playboy headphones, which is kind of cool. I'm not going to scroll down. It has all kind of stuff, but we are going to watch a clip from the Playboy TV. So if you're under 18, guys, put your blinders on. You don't want to watch this. But no, it's not too bad. It's nothing more than like anything in bathing suits and stuff. So it gives you a little clip of what is on Playboy TV. And I think we really do need to watch it to kind of see what I'm talking about. The streaming services, guys. So let's get to the streaming part here.
Till I get up, time is barely on our side. I don't wanna waste what's left. The storms we chase are leading us, and love is all we'll ever trust. Yeah, no, I don't wanna waste what's left. And on we'll go.
Kind of what I'm talking about. It is basically a good streaming service, guys, that has a lot of potential here. And of course, you get to see the bunnies from their home, whether they're out doing whatever adventures they have. They have 1,000 hours of services. And as you know, man, sex sells. As much as you hate to say it, you know it sells. Sex and drugs, like the MJ, and gambling, man, is top 3. And this kind of fits in with the golden nugget in the, you know... Do I need to say more? Do I really need to say more? We got to be... This video is probably going to get demonetized, but I have to put it out there, guys. I have to put it out there. And let's go back to this article here, guys, because I do think that there's a lot of great stuff here. So as we go down here to some of this stuff, the CEO, Ben Kahn, is thrilled with our performance of the 3 and 9 month periods through September 2020. Revenue grew 86% year over year, which we read that up through there. And they have reflecting strength in our direct-to-consumer segment, as well as robust performance from our licensing segment, including great traction with our PacSun misguided collaboration lines, and from our Asia style and apparel business. So, Khan continued to say they're looking forward to the remainder of 2020. We expect to meet and exceed our recent increased full year of 2020. Financial projections of $137 million in revenue and $28 million in adjusted EBITDA. As the fourth quarter seasonally is our strongest year, no exception, we've experienced strong Halloween and early holiday shopping season. So, as they look forward to 2021, guys, they're encouraged by strong traction in the digital commerce offerings. Our pipeline licensing deals recently launched our own operated products and recovery to some of our COVID-related costs in our gaming and apparel business. So we anticipate we'll come back online as those supply chains normalize. And I think, guys, that is another good thing to keep in mind. Playboy just isn't a magazine. They have digital services. They have gaming services. There's games out there, apparel. And as you know, what was one of the main reasons that I liked Golden Nugget when it came to online, the gambling, and why I chose that one? There's a lot of gambling stocks out there. But why did I like Golden Nugget number 1? The brand. And Playboy is a brand. I don't care who you are. You can live under a rock. You can be Mr. going to church every Sunday. But everybody knows who Playboy is. That's right. So Playboy is a name, a household name. I don't care who you are. You're the pastor of the church. Or, you know, like I said, you live in the woods and off the grid. You've heard of Playboy. You know what Playboy is. So I like the branding here, and it's not going to be hard for Playboy to get deals with companies if they want to expand into more digital products, more streaming, because they know that with that brand power of Playboy and the Hugh Hefner legacy, guys, that's right, Hugh Hefner legacy. So Hugh Hefner, this is kind of like the Tillman Fertitta of Golden Nugget for me, man, but I know, you know, we got a new CEO in here now because, you know, Hugh has passed on, but still, guys, this is really, I think, a great opportunity, and I just wanted to bring this to your attention. Literally, bring it to your attention. And I know this is kind of a laughing matter, but in a serious thing, I really think there's money to be made here on this Playboy stock. They're not only just having the brand, but they're having year-over-year growth with a lot of different streams of media, guys. And like I said, the branding name. Look here, on the 9-month basis, net revenues were $101 million, representing growth of $44 million, over 78% in the same period of 2019. The growth was primarily driven by direct-to-consumer revenue, which increased $40 million, and licensing revenue, which increased $7 million from the year of the age period. And it says here, for the net loss for the first 9 months of the year improved to $12.8 million, from a net loss of $17.6 million, with a net loss of $4.8 million in 2020. The adjusted EBITDA for the first 9 months was $21.8 million, up 12.3 over the same year. And as we go down here to the last couple of parts here, about the Playboy, which I like. Playboy is the largest and most recognizable global lifestyle platforms in the world, with a strong consumer business focused on our 4 categories: the pleasure lifestyle, sexual wellness, style and apparel, and gaming and lifestyle, and beauty and grooming. Under its mission of all pleasure of all, the 67-year-old Playboy brands drives more than $3 billion in global consumer spent in sales products over 180 countries. Playboy is one of the most iconic brands. Playboy Enterprise is set to return from the public markets via SPAC with Mountain Crest acquisition. The merger is valued at $381 million, including the net debt of outstanding $142 million of Playboy will under the ticker symbol PLBY, and the deal is expected to close in the first quarter of 2021. I knew it was either the fourth quarter of this year or the first quarter of 21. So this is just crazy, guys. So what do you all think, man? Comment down below. Is this something that you're looking to get in on, or are you just going to keep an eye on it? I mean, I wish they had options on it because I could buy a long call and just see what happens. Put a couple $100 into a call going into like April or June next year. But right now you can purchase the shares. And like I said, there's high reward of low risk. So comment down below, guys. You guys looking to purchase this bad boy or just keep an eye on it? Right now I got it in my SPAC watch list. And I may actually have to pick up some shares just for the fun. I may buy 10 or 20 shares and just see what happens because there's low risk. So, all right, guys. Hope you all enjoyed today's video. If you did, hit that thumbs up and join the Thumbs Up Nation. Guys, I love and appreciate every single one of you. And remember to always buy the dip. That's right. Buy the dip. So, baby, let's go.